Hi guys, this one's subscribers only, right? So I've just done a YouTube video for the public, and in essence, what I want to do is just go into a little bit more depth, right? So I guess if you look at the last couple of videos that I've done, they've been kind of lessons, not just kind of this is the price, this is where it is. It's understanding the logic as to why we are where we are and what we're likely to see kind of next, right? And although I'm using Bitcoin as the example, this applies to kind of all markets, right? As I've said for the last year or so, for you guys that have been with us longer, you already know that the kind of value area was set kind of March 2020, right? Everything was almost restarted, refreshed at that particular point. We're not seeing enough of a divergence yet in various instruments for them to be vastly different, right? Now, obviously, as time goes on, you'll have more and more trading opportunities across various pairs if that's what you're looking for, as obviously the bigger picture starts to diverge from another instrument. Okay, so where we are right now, if we use kind of Bitcoin as the example, right? The reason that I feel that we were still only in that um, weekly move, first of all, up to a monthly three, right, is that, I go back from what I'd said kind of prior to the end of 2017. It was kind of an interesting time, but not really from a trader's or an institutional perspective, right? The VCs and the family offices were kind of dipping their toe in the water, right? There was nothing really more than that, right? So we have to take the kind of prior information and use that as almost the starting or the base, right? So we had the first move on and around the 19K, right? Which was the first 0 to 1, right? We then come back and had the two, and then we've obviously rallied all the way, 3, 4, and 5, right? Now, obviously, in terms of the move where we were, and the reason that I thought this was then the larger scale move for only the 1, 2, 3, right, was that you could actually see the moves inside this move, giving us the 1, 2, 3, 4, 5, right? And it wasn't until we got, I think it was the middle one, where we actually had the proper extensions from the Fibonacci, that you could really, really see that the institutionals were taking some control of the overall situation. Right? Now, as I just said in the other video for the public, what a lot of people have the misconception of is that institutionals come in, price is just going to rally up, right? Now, on a flip of that, they're actually saying as well, you tend to think or assume that institutionals coming in, they're going to want the lowest price, right? And again, that kind of isn't the case, because although they kind of act as one, they are various organizations, right? So they have a similar strategy, but they don't function as one entity. Okay. So the trouble being is, like with the price at these kinds of levels, let me change this different color. Like the price at these all-time high levels, right? A lot of people will say, well, why didn't Composite Man just sell off all of his situation in terms of the leverage fund situation, right? Now, the trouble with, if we did see an out and out sell off, we would have had crypto Twitter buying, Composite Man selling, and the price would have looked something like this, right? Instead of, I wouldn't say a steady move, but it was something that was manageable, right? Now, also, what you got to understand is that when the price drops down, right, it's almost the inverse that's happening from Composite Man's perspective, because they've bought very cheap and they need buyers to sell into the types of dips, right? So if you see the logic and understand the logic as to why we're likely to do what we do, you'll kind of quickly understand that things like the order blocks and the liquidity in the auction areas, all the various aspects, the master patterns, the Wyckoffs, they all fit around the overall Elliott bias, right? And the Elliott bias is based on the fibs, right? So in essence, it all comes down to kind of human sentiment, right? And the psychology around how us as humans, one, want to see patterns, and two, utilize key levels, right? So you'll see key levels at kind of cool numbers. So, you see it 50K, 40K, 30K. You'll also see it at midpoint numbers. So, 25, 35, 45, etc., etc. And they all, I suppose, yeah, they all play a role in the bigger picture, right? So knowing kind of where we've been, right? Understanding now from the COT perspective why they didn't just sell off at 69K, and knowing why they're likely to accumulate at these kind of ranges, because they're now playing a kind of a hedge game, right? So assume from Composite Man's perspective, you've bought roughly at 4K, right? And I say 4K because you'll see a little bit of movement in and around 4K, right? And when I started looking at the value area the first time round, right? So going back to December 2020, the post I posted around Bitcoin being institutionalized, etc., was to do with a fair market value at around 35K, right? So coming from the VC and the private equity kind of space, understanding how bonuses work and why the functionality of the managing partners and the fund managers, these guys are looking at often 10x returns, right? Is a kind of rule of thumb, right? They will obviously run it and rally it much further, but what they like to see is a 10x return is a good, it's a good Christmas bonus for them in terms of the payout, right? So what we were seeing is prior to the 2018, right? So the end of 2017, right? We saw the rally, and then we saw this long, right, like accumulation type phase play itself out, right? And then we had the kind of hyper rally, right? Now that hyper rally would give you a good, like I said, idea in terms of where we've come from, right? 10x that, and you'll see that we were averaging 3.5K down here, right? I haven't even done this. Let's see if there's anything on in terms of the fixed volume. So if we come from the top down to the low, right, and then we go across, right? Yeah, nine K, right? So in essence, 9K is going to be potentially a 10x return on 9K could give us a monthly five up and around 90K, 100K, right? Which would make some logic, right? Now, I was looking at this, like I said, prior to the actual move in terms of this move back down, right? And it was when crypto first become really interesting, right? Up until then, all I was seeing is kind of technology plays, right? It was kind of, kids with computers. It was the financial, I suppose, financial companies. They were talking about it, but they weren't doing anything about it, right? And they were, I remember going to a meeting down in Monaco with what's known as BIAN, right, which is the Banking Industry Architecture Network. And these guys were talking blockchain, and it was almost like they were talking another language, right? And this was probably 2016, 2017 kind of time. And I think in terms of understanding where banks operate from a trading perspective, so the kind of the trading floor, trading desks, compared to where they operate at a day-to-day managerial point of view, and the kind of the bank's business functionalities, which will actually encompass the trading desk as a kind of subsidiary of the bigger picture, you could see that the adoption wasn't going to be quick, right? So during this time, I think there was more VCs, right, than actually traders. Now, I think probably on the confirmation kind of away from this, right, so possibly in and around these kinds of areas, right, so like I said, probably around the 9-10K mark is where we first seen bigger companies in terms of hedge funds and more institutional private equity type firms actually get a little bit excited, right? So they've been buying in and around this range, right, with an average value of 9K in terms of the overall position. But there was a lot of players that bought underneath that, right? So when we 10x, like I said, from around 3.5, 4K, you could see that the reaccumulation, right? And I think I've actually got a post on this. Let me see where I posted. I think there was the year in the life of Bitcoin. I did put this in somewhere. Where's the related ideas? Okay, well, I'm going to blabber on, and I'm going to try to find the year in the life of Bitcoin post. So, in essence, right, what I was getting at, and I'll try to find this to be exact, what I was getting at in this particular post was knowing the value area, knowing that we want a 10x type return from the institutional players, was that you can kind of map out not so much the expected targets, but the expected value ranges, right? So this year was the reaccumulation post, and this was January 2021, right? So go back to where we were in terms of January 2021, and you'll see on the chart, January 2021, we were in and around this range, right? Now, part of that reaccumulation and the reason and the logic, behind that was we were seeing anywhere from 3.5K realistic all the way up to 10K, which was the psychological number, right? That was kind of, you break 10K, it's like, where's it going? It's 20K, 30K, 40K, and so on and so on. So seeing the numbers there, knowing that we hadn't had the fib extensions to the extremes, we could see that we were in that reaccumulation to take us up to the extension, right? And that was then the logic behind the call in of why we were at the bigger picture for the rocket post, right? So come back down, I've just lost the year one again. Coming back down to the rocket post, right? Which was obviously then at an extension level, right? Where we could actually start to see, come back to this, we were actually at the extension level where we could actually see from this, right? Extension level for the fibs and the seller's climax AR setting itself in from that top, right? So again, knowing that we were now transforming from it just being a technology play to ultimately having the institutionalized aspect of Bitcoin, it gave us the next kind of target, right? In terms of seeing the extension, like I said, I think was the middle one, right? And then we could kind of, clarify, justify an AR, followed by then obviously the moves up for the UT, back up to the UTAD, and then the drop on down, right? Now, the levels in terms of coming back to were very similar to this, right? It's quite broad, but we were expecting obviously this based on where we've been before, right? Which equals liquidity, right? Liquidity, right? Now, obviously, the trouble being is that prior to the big boys getting in, there's less interest down here for the lack of control, right? And when I say that, you have to realize someone like Saylor, right, would have been buying at an average. I think it was 21 to 25K was the overall average, I believe, in terms of the overall situation. If the price runs away too far from the fund manager, right? So let's just say the average was 20K, just to round it down, right? 20K average for Saylor. 1 month underneath that average would put a lot of strain and pressure on the fund itself, right? There's basically billions of dollars at risk currently at the paper loss, right? That goes on for 2 months and people lose their jobs, right? And that's basically where and why you can see the logic as to why we'd come back to the previous move, right? Now, there's loads of information on Elliott waves and, the logic behind why you'd come back to the previous necklines and so on and so on. But in essence, understanding, like I said, why I wanted to come into a bit of depth with this one was now knowing that we've had the 3, we've come down 4, and we had the truncated 5, right? The truncated 5 move means that we didn't have the explosive moves above the previous all-time high that people like your Plan B and Moore Carls were actually expecting, right? And the reason then we could see a longer term kind of move down was based on the fact that we failed to go higher, right? And if you watch the video that I've done on the candlesticks, right, and understanding inside the candlestick, it's almost like a game of some kind of sports game, right, or sports event. You could play football or soccer, right? You could be 2-0 down until the final minute and score 2 goals, right? And the candle can change that much. We saw that last month or the month before when I was saying about the close above the 19k level. And within the last couple of hours of the move, we'd gone and rallied above that close, which meant Composite Man was clearly in control of the overall situation, right? Now, in terms of where we are and knowing that we've had obviously redistribution, we've had obviously a dip back down into this level of liquidity. Now, the reality is we could have come into liquidity, right? We could have an A, a B, and down for C, and this has given us an accumulation phase, right? This could still be A. We could come back up for B into liquidity, right? And then back down for C, back down into the same levels of liquidity before going off. Okay, so either which way, I think we're still in the same kind of situation, regardless of whether this is the A or the B. We're currently looking at a hedging strategy for Composite Man that is allowing them to sell off the rallies that they were buying back over here, right? You still have potentially the value area in and around this kind of region, right? Which probably in and around there with the highs. That's around 35k, right? And therefore, they're very likely to be accumulating a decent size position in terms of asset managers. And what you'll see is a transition in leverage funds. When that crossover comes closer, and you'll see it from the Ethereum play recently, the gap is starting to narrow, right? When you understand that and you can see the cross coming, you'll understand that they've kind of unloaded enough for them to warrant the next major move up, right? So I guess there's nothing different that I've said in this one that we haven't really covered previously. But what I wanted to do is just kind of bundle it all together, right? So I know this is me just kind of blabbering on in essence, but I think just for you guys, and especially you newer guys, you might kind of lack some of the understanding of what we've spoke about or what I've spoke about in this video. But in essence, this is where you've got to go back and review the videos and watch some of the things like the candlestick stories and understand we're doing what we're doing for a reason. This isn't about BlackRock coming in and the price rallying, but this also isn't BlackRock coming in and the price dropping to $2,000 because they want the best price. This is all to do with fair market value in and around the extension levels that are psychological levels for retail that Composite Man understands and can utilize based on 10x returns on the kind of numbers that we're aiming for and we're wanting to see, right? So what I'll do is I'll just put the last one. I'm going to get rid of some of these, make it a bit cleaner. So just to finish this particular kind of lesson off, right, is that in the last kind of bit of the situation, right, we've actually got from the previous target levels, I can't think of what I'd call them. So the weekly forecast, right? Now, like I mentioned about obviously 10x and the value in and around these levels being 10k roughly, the logic in and around the 10k up would have put us, look, in the deep to shallow area of around 10x the previous move, right? So we haven't got there, which means we're very likely to see, if this is the fall, we're likely to come into this kind of region 10x for the big boys. And what you then have to appreciate is we get anywhere near the 100k, the amount of new buyers we will see at 100k will be scary, right? Because it'll be, I've missed the boat, I want to get in, I'm kind of happy that Bitcoin is above these key levels, I'm confident that Bitcoin's here to stay, I'll be buying in at 100k. That's the mentality that we're likely to see, right? All that we're going to have then is the potential next move, right? So from the monthly 5 is very likely to come back down to the neckline, right? You're going to have obviously these levels in terms of a liquidity grab there, right? We might come back up and play around again, and then we're very likely to drop back down, potentially all the way to another value area, right? So these value areas will change and obviously mature as the instrument matures, but in essence, we could end up with another truncation on the monthly 5 in terms of a situation, right? And that's where we're not really rallying, like we didn't really rally on the first 1, 2 in this move, right? We're not really rallying. So on the assumption that, this could be the 0, this could be the 1, and some people are claiming this, if that is the 1 and this is the 2, right? The simple thing you have to look at is the trend-based fib extensions, right? And watch this, 0 to 1 and back down 2, right? We're very likely to get even the 4618 is only at 62k, right? So I don't feel that this is done yet for these reasons, right? I think that there's liquidity going to be in around that 100k. That's going to give 10x to composite man. We've come back down to the liquidity level underneath fair market value, allowing him to make profit on some of these moves and accumulate a better position that will give him, I suppose, more confidence in the overall situation. So I think that's where we are at the moment. Like I said, I'll keep updating you guys, as well. Any questions, just kind of ping them in, one of the chat channels. And I hope you enjoyed this one. Thanks for watching.